As you get started, the first thing that you want to do is establish a relationship with an investment advisor. You want to establish relationships as you embark on this path because you're going to want somebody to throw some ideas off of that can also help you facilitate some of these transactions. They can also act as a voice of reason at times, and they can provide counterpoints to your ideas. We also recognize that the market is a very dynamic place, and it's always good to have an advisor, to have someone that monitors this stuff more closely so they can let you know when things are not looking right or going well. When you first begin investing, start with what you know and the things that you're interested in. If you're investing in areas that you already pay attention to, then there's less of a learning curve, and those are areas of the economy that you're already familiar with and you already keep up with and follow. You'll also be proud of the fact that you're an owner in these corporations, so you're more likely to participate and be an active shareholder. Our hope is that it'll become an experience that you'll want to share, and as you become more comfortable with these concepts, you'll push yourself and expand your portfolio. Then pretty soon you'll begin to think differently, and you'll start to incorporate stocks from other industries and sectors in your portfolio. And don't feel bad if you jump from one company to another as you try to find the firms that work for you. There are a lot of choices out there, and remember, this is just about doing what's best for you. In terms of buying and selling, there are some basics that you need to understand when you actually go to transact with stocks. There's a bid price and an ask price. The bid price is the price you are willing to pay to purchase one share of the stock. So if you think about it like an auction, you're essentially making a bid to purchase the stock. It doesn't guarantee that you'll get it at that price, and of course, you can just do a market order where the brokerage will just buy the stock at whatever price it's available at. If you're going to do a limit order, which is the fourth one down here, that's where you can specify a price that you're willing to buy or sell at, and the platform will then only transact at that price. So those orders usually last for the trading day, but getting back to the ask price, that's essentially the price that someone is willing to accept to part with a share of stock. So that's the price that's currently out on the market that's being demanded for shares. At the end of the day, market orders generally work pretty well for most investors, and unless you're working in very large or very small quantities, you aren't going to move your profit all that much. When it comes to growth versus dividend stocks, the growth stock is relying solely on the growth of the stock price in order to provide a return. And so these companies are expected to maximize their cash flows in an effort to beat analyst valuations and outperform price expectations. Dividend stocks are stocks that are paying a guaranteed return to their investor, and generally there's a declared dividend and dividend growth rate, and that will allow you to see how the company views its future outlook. Most dividend-paying stocks are more well-established firms. However, some companies will participate in one-time and special dividends. And generally, when someone refers to a dividend-paying stock, they're referring to a stock that pays out a dividend on a regular basis, like 2 to 4 times a year. If you're new to investing, sticking with dividend stocks can be a good way to try and help minimize price fluctuation. Sometimes a lot of the risk associated with your portfolio is going to be from the price fluctuations of growth stocks. And by focusing on dividend stocks, that will help bring some price stability to your portfolio. Now keep in mind, as they pay dividends, they are also reducing their cash flows, so the stock price will go lower and reflect that. But remember, you're getting the dividend payment as a way to offset that. Depending on your brokerage account, you can have your dividends automatically reinvested, and every broker I've ever met has always encouraged me to do that. You should certainly consider that, but if you need the cash, you can always receive the dividend as cash and spend it as you see fit. If you still want to reinvest, you can always do that the next time you rebalance your portfolio. Now, the investment world is a fairly complicated place. There are a lot of folks that are out there with different types of certifications, and I just want to walk you through some of the more common ones. There are a lot of certifications that are out there that we don't include, but here are some of the main ones that we want to cover with you. Before working with any investment professional, you should ask them about their background, their education, and any certifications that they do have. The more that they have, the more you'll know that they're committed to investments and going to work hard for you. Now, there are a lot of certifications that are out there that we don't cover, but I do want to cover some that are more common. The first one listed here is actually not an investing-related certification, the CPA. This is a certified public accountant, and while this is an individual who is knowledgeable over financial statements and business plans, they are not an investment professional. CPAs are primarily consultants and folks who help out small businesses and business owners, and a lot of times they're preparing financial statements for tax purposes, but their responsibilities may vary, and at larger corporations and institutions, these individuals a lot of the times are the ones controlling the cash flow. In other words, these are very helpful, intelligent people, but they are not the right type of people to be having investment conversations with. The main investment-related certification, at least from an analyst perspective, has always been the Certificated Financial Analyst. The CFA is an individual that knows investment statistics and math theories well, and they can deploy them at a very high level. These are individuals that had to take exams in order to validate that they know and understand the math and the main investment concepts. Typically, these individuals are not necessarily the people that you're going to talk to from an advisory perspective. These are usually the individuals that are working for large investment firms and corporations that are doing all of the investment analysis and working in research roles to support the main trading groups and account managers. Now, sometimes these individuals also work for large corporations, helping to manage their portfolios and hedge different strategy positions or to help make commodity prices more reliable. Now, the individual that you're most likely to want to find and work with are the certified financial planners. These are people with extensive financial experience. They not only have an undergraduate degree in finance, but they had to take additional credit hours beyond that. Some may work towards a master's degree, but to qualify to take the exam, you have to have so many credit hours of learning at a higher institution. And then when you take the exam, it's a very difficult exam, and it tests your knowledge of all the different financial concepts. So these are individuals that have studied finance for a long time and have extensive knowledge. The vast majority of them are going to be good partners for you, people that you can bounce ideas off of, but will give you realistic and reasonable answers. Now, that said, most of these people are going to be representing different corporations or investment firms and have financial products that they're going to want to sell you. So there is going to be a goal that these folks have, and it's to sell you their products. So ultimately, they're going to want to manage your money or sell you on the products that they have. So don't be surprised if they discourage you from directly investing in the stock market. What we're trying to encourage you to do is listen to them and find out if those products are right for you. And in certain instances, they might be great products that you can include in your risk-free portfolio. Now, when it comes to actually making stock trades, you're likely working with an investment broker. So this is somebody that's holding a variety of different trading licenses, like you may have heard of licenses like the Series 6, Series 7, or Series 63. Those types of licenses allow them to buy and sell different products on your behalf, and if you're using some type of online or digital app to make your trades, you're able to facilitate those transactions due to interactions between brokers and market makers. So knowing a broker is always a good idea. You can bounce ideas off of them, and they're going to be able to tell you what's going on in the market. They know what people are buying and selling and what are the hot commodities right now. So certainly having a good relationship with a broker is worth your time, because a couple of quick conversations with them before you make your trades can really work out well sometimes. These folks have licenses, however, they may or may not have certifications. And then the last role that I want to cover is the financial advisor. This is a role that's more general. This can be a very experienced, well-educated individual, or this can be somebody that's brand new to investments. So if you're meeting with an individual that has the title of financial advisor, certainly don't view that as a bad thing, not at all. Just make sure to ask them about their education, their licensing, and their work history to try to understand where their advice is coming from. Now, with investments, your experience level can make a difference, and depending on what you're getting into, it can make a difference between a profit and a loss. So these folks are typically trying to offer you different financial products, not necessarily stocks. And if you go to them and you want to talk about stocks, a lot of them are going to be intrigued by the conversation, but that's not necessarily what they're there to sell. So don't be surprised if they try to reorient you towards their financial products so they can make a sale. And again, those can be different types of products that are sometimes way more secure than stocks and could be part of your risk-free portfolio. So we want to encourage you to talk about what you want with them, because what you might find is a good situation where they can sell you on one of their products while giving you advice on what you want to include in your risky portfolio. Now, as you enter the industry and get more acquainted, I also want to talk about the banker and the role that they play. They are the people that oversee your financial transactions and manage your accounts. You need them if you want to open up accounts, and they need you to maintain balances so that the bank can make loans and be profitable. They also will want to sell you other products that could be part of your risk-free portfolio. They can sell you CDs or certificates of deposits. Those are secure investments that pay out a steady interest rate over a set time period. They can also provide you with savings accounts and money market accounts that can also help you earn interest off your cash. But again, the banker is somebody that can help you out. They can benefit you, but they're not an investment professional. They do know and work with many, though, and can always refer you to some good ones. And then the final person that I wanted to mention was just your portfolio coach here. I'm just trying to offer you some friendly advice in the hope that it's going to benefit your outcomes by better understanding the market and basic investment principles. I just want to say that I appreciate your time and you embracing this program and trying to learn something more. When I see people working through this program and making leaps and bounds in their investment habits, that's what reminds me why I do this. So certainly thank you for welcoming me into your life and for allowing me to try and provide you with a little benefit and inspiration. In regards to choosing a brokerage firm, there are a variety of them that are out there. They have a lot of different trading platforms, and some are more oriented towards different types of trading or for people with certain types of needs. So you really don't have to have too many interactions when going to an institution to trade. Now, you might also find that some of the names that you were initially excited about turn out to be the ones that you learn to stay away from. Now, that said, everyone's experience is different, so don't set expectations for yourself based on someone else's experience. A lot of times you'll find people that work for big firms that are phenomenal individuals and that work really hard. So don't discount a big firm as some type of bad thing. And at the same time, you might find people at smaller firms that will sign fiduciary responsibilities, but then think that they can get away with things that, in your opinion, aren't best for you. So do some research and try to find the one that best suits your needs.